Hi, and welcome to the latest edition of the Heron Financial Podcast. I'm Matt, one of the founders here at Heron, and I'm joined today by Josh, one of our senior mortgage advisors. We're aiming to demystify the mortgage process, make it accessible, and really educate you around some of the tricky choices that you've got to make, provide you with as much information as possible. So hopefully today, I'm going to ask Josh lots of interesting questions, and he will give you lots of interesting answers. Okay, Josh, today we're talking about remortgaging. And we're going to try and answer some of those big questions.
Yeah.
When should somebody think about remortgaging their property if they own already?
I think the best time to start looking at remortgaging is, I would say, about 7 months before your deal expires, because what we're starting to see is the window for remortgaging about 6 months before your deal expires. But if you're speaking to like ourselves, like a month before that, you're getting prepared to start looking at the process in more detail when that window opens. So it allows you to get a better opportunity and a better front up on trying to get the best rates possible for yourself.
So if you're on a mortgage deal at the moment,
yeah,
and I guess you probably are if you're watching this, or you're a sucker for punishment, and you want to try and think about those options as early as possible, as you mentioned, clearly one of the things that you might be looking at is, can I get a new deal? Can I get a new interest rate that might help me avoid the standard variable rate? But what other things do people typically talk about at the point that they're remortgaging? Are there other things they want to discuss with you at that point in time?
Yeah, definitely. I mean, remortgaging is a perfect opportunity to review your whole situation. I mean, what we can do is change the term around.
Yeah.
Okay, you can try and maybe pay the mortgage off quicker, or potentially take it out for a longer period of time to help reduce the payments if needed. You could increase the borrowing.
Yeah.
So one common one is home improvement. So if you're looking to do that new kitchen or that new bathroom and you're wanting to put on the mortgage, these are the perfect times to try and do it.
Yeah.
Okay. As well as maybe retrofitting the property and trying to increase the energy rating. These are all times to look at having those conversations.
So why does it make sense to do it then? Why should you tie in the two things?
Because if you're already tied into a deal and looking to take out, you're going to have two mortgages maybe not aligning with one another. You might not be able to do it in that sense because you might be tied into a fixed deal that you can't actually take any borrowing out. But having that flexibility, we could look at staying with the same lender. We could look at new lenders. It just offers more variety to yourself and flexibility on the whole situation.
So the message there, I guess, is, and we talk openly with clients about this, don't we, that if your remortgage deal is coming, if there's anything at all that you're thinking about in your financial life, bring it up with you, right?
Yeah.
And have that conversation. Does that happen pretty frequently?
Yeah. I mean, I would always say, to all my clients, almost just communicate with myself what your plans are.
Yeah.
I think what we want to try and do is not just look at what you want to do now, but almost try and plan for the future. Yeah. So how quickly do you want to try and pay the mortgage off? When do you want to retire?
Yeah.
Do you want to try and move house in the future? Try and align all these goals with your remortgage so then we can align the mortgage to your future goals.
Yeah. Yeah. And I think that's the key, right? Is talking to us and giving you ample time to make those decisions and help the client make the decisions. What happens if you don't? So let's paint that picture. If I'm watching this now as somebody who's got a current mortgage, if I don't take any action, what's going to happen?
You're virtually just going to roll onto the standard variable rate with the mortgage provider that you're currently with.
So what is that?
It's a very high interest rate where you're not tied into it, so you have flexibility to leave it whenever you wanted, but you're going to see your payments jump up, okay? And with that, it just means quite a bit of money almost wasted for not being tied in or getting a new deal secured.
And does this happen? Do you see it?
Yes, we get it quite often where clients are either just about to roll on to their deal or have come to us, didn't know they're on it and have been on it for a very long time, meaning they've almost wasted quite a bit of money if we had known this.
Well, you've taken my next question, which is, does it ever happen that people are just overpaying and they don't even realize it?
Yeah, it's...
How does that happen? I mean, surely you would know, right? Would your lender inform you what typically happens there?
Your lenders will typically inform you. Lenders will typically write to you, but there's not a great deal of communication. I mean, if you're getting one letter from your lender through the post, how easy it is to miss one letter. Either it gets misplaced by the postman or potentially it just goes into that pile that you think is almost not needed
Tomorrow's
to be
problem.
read. Yeah, tomorrow's problem, or it just gets filed away in that cupboard that you then forget to look at next week. Or it's one of those situations that you will get communicated, but it can be missed, that communication.
Yeah.
And then what you might just see is you might see your payments just jump up in your bank account just straight away.
And that's what happens, right? The direct debit just changes.
Yeah, that's correct. Your direct debit will just change. In their instance, they believe they've warned you with ample time.
Yeah.
And then your direct debit will just change the day that your mortgage expires.
Wow. Yeah. So it can be really expensive.
Yeah, it really can. It can obviously affect lifestyles as well. I mean, it can, if it's a payment that is potentially unsustainable, then you're going to see having money in your bank account and potentially quite a lot of it gone to the mortgage payment without you even being aware of it.
Yeah.
And then that could obviously affect your day-to-day life as well.
Yeah. And in the absence of advice, potentially kind of an unnecessary thing to happen too.
Yeah. I mean, it's one of those that I think there's lots of different types of deals available to clients, and it's understanding why is it rolling onto the standard variable? Is it a situation that maybe you're not aware that it's happening?
Yeah.
Or are you wanting to roll onto it for any particular reason? I mean, if you are wanting to roll onto it for the standard variable rate, we would maybe ask why that is, because there's lots of different mortgage products out there that we can maybe still tailor it to yourself as well.
Yeah. And why might that happen? What situation might there be where somebody would potentially want to, well, maybe not want to, but it might be the right thing for them to roll onto that standard variable when you come across those situations?
I mean, one of the biggest ones for myself is if you're maybe looking to move house.
Yeah.
You might then think, I don't want to tie into a new deal because we're looking to move house in the next 6 to 12 months. We don't want to get tied into a new mortgage. But then even with doing so, lenders will offer fixed deals with quite a lot of portability, which means that, yes, you might be tied into a mortgage, but you can still move that product onto the new property. So that's saving you both money on being on the standard variable rate and potentially moving with your existing lender who you're potentially happy with their customer journey through.
Yeah. And I think that's something that we come across a lot, right? Is where maybe somebody hasn't had that advice. They have, in theory, done the right thing. They might have switched onto a new fixed rate, for example, to avoid the standard variable. But unbeknownst to them, that then impacts what they can do because they were planning to move house in a year's time. There can be a downside to being proactive, right? Or not taking advice. Yeah,
definitely. I think it's a situation where, like I said, we'll tailor the journey to yourself. So if you are looking to move house, for example, we would find a mortgage product that would be suitable and tailored to you allowing to move house.
Yeah.
If you were looking to stay in your property for next couple of years and then looking to move, as an example, we would time it all up. So then it would expire when you would be looking to move and then re-pick up those conversations with you in the future.
Yeah, I mean, what you're painting the picture of here is the importance of having the conversation, getting the advice and engaging with you, right? And you mentioned at the start of today's session about 6 or 7 months out. Is it bad to go even earlier than that if some of these life decisions are in your mind? Would you welcome that conversation from a client?
Yeah, I mean, I'll always have conversations with my clients. If my clients are even having that thought about should we look to move house, I would welcome a conversation with that, because the biggest thing with that is then we could help with that house journey for them. So it means that if they are looking to move house, what can they potentially afford? Is that what they're needing to afford to be able to buy, or do they need to maybe...
So you're ruling it in or ruling it out.
Yeah, exactly. And then it can align with the mortgage journey of, we can do this now, or actually we need to wait a few years and then look at it.
Yeah, and it's not uncommon, is it, for you to have a conversation with a client like that? You then help them with the remortgage almost as a short-term measure, and then, as you say, you kind of build in the planning for the future as well. That's something that you do. That's something you help.
Yeah, a lot of remortgage conversations I have is almost kind of in twofold, where we talk about the remortgage, but very much at the same time, we're looking at the affordability. What can they buy? How much equity do they have in their house? What would the process be? So we're doing that all together. So then we're aligning their remortgage with their potential house purchasing journey and making sure that it goes the way they want it to.
Great. Very helpful. The remortgage process itself, this might be a how long's a piece of string answer. How long does it take from start to finish? And you mentioned there about talking to you 6, 7 months out. Just play us through the scenario from there. Typically, how long does this take somebody to do?
A remortgage process doesn't have to be a long drawn out process. It can be quite straightforward. It's a sense of understanding what your plans are, lining that, finding the right deal, and then with that, applying for the mortgage. The mortgage itself can take up to a month to actually get approved, depending on the lender. But then after that, the rest of it is more, if we're changing lenders, we might need a solicitor involved, which is probably the longest process out of all of it, if I'm honest. But then if we're staying with your existing lender, there's no legal work required. So sometimes it could be as quick as 3-4 weeks. Sometimes it can be...
And that early engagement, again, helps with that, presumably.
Yeah, exactly. Having that early engagement allows us to understand where we're going to go, how we're going to structure it, and what the best plans are for yourself.
Because the solicitor's bit, and we've got to be mindful, can be quite painful, can't it, if people don't get that right? And it does put people off. I mean, I was looking at some stats prior to this conversation with you, and I think 500,000 transactions in 2024 were potentially abandoned because the solicitor process got quite painful. And those clients, presumably, we can't say for certain, but presumably ended up potentially sticking with their existing lender, and that could have detrimented them financially, right? It could have been a bad thing for them in terms of money.
Potentially, staying with your existing lender doesn't necessarily mean sometimes getting the best overall deal. It might be an easier process because there's less paperwork to fill out, but there might be other lenders out there who are offering much better deals that you might be able to save quite a lot of money on.
And that's where you come in.
Yeah, and that's exactly where we'll come in. We'll make sure that we're always trying to find you the best deal possible on the market.
Yeah, and I think it's that sort of broad comparison service that you're offering that shouldn't be underestimated. How does it work when somebody's been and done a bit of research already themselves? Do you often find that they might be slightly off on the wrong track? Maybe if they've started out trying to have a look online at different options, etc. Do you have to sort of correct the course a little bit when you're having the conversation?
No, I mean, I always say to my clients, I quite like my clients sometimes doing their own kind of research and coming to myself and being like, why haven't we gone with these deals? Because sometimes comparison websites will show you particular deals, but we see those deals, but there's sometimes hidden costs behind it. There's sometimes legal costs or just unusual aspects that isn't shown on the comparison website. So I always like my clients to trust me. So if they think they found a better deal online, I welcome them to come and tell me, and then I could walk them through with them. The reason why we didn't go with that deal was due to X, Y, and Z. And then that is why we went with this deal instead. So
there's a peace of mind element.
Yeah, exactly. Because the way I kind of look at it is I like my customers to trust me. I want them to know that I'm always giving them the best advice possible. But if I was myself, I would always like to do my own research in the background as well. And with that, that's why I open that two-way communication and make sure that if they think they found something, I'm more than happy to have that conversation on why we didn't approach that. One thing with comparison websites is sometimes the data they have is slightly outdated. So they might be looking at weeks, but at products that actually aren't available anymore. So then that's...
Because the market moves so quickly.
Yeah, exactly. The market is changing virtually on a day-to-day basis. So talking that through with the client so they're fully aware of it also gives them that peace of mind.
Yeah, and I think that's you talked about welcoming that. We absolutely do. I mean, we offer the service for free. I mentioned at the start of today's session that we want to try and educate people, and sometimes that means you have to allow somebody to go off, do a bit of reading, come to you, hopefully in a bit more of an informed place, and then you can have a bit more of a collaborative discussion as opposed to you telling them what to do, which can be a bit of a one-way conversation, right? So that idea of collaborating and educating is something that obviously we're very keen on. We want to make sure that our clients feel like they're being educated as well as getting the best deal or getting a deal that's right for them. It's different, isn't it, when they've come and done a bit of research, talked to you, perhaps put themselves in a bit more of an informed position. It's not such a one-way conversation then with you.
No, sometimes it can be slightly difficult to do those conversations sometimes because if the market's moved in a negative way, then we're having to tell them the rates we're able to actually get them are higher than what they're maybe seeing. But like I mentioned, that might just be because the data they're seeing is slightly outdated, that those products just are not available anymore on the market. And that's one of the key bits with remortgaging is the market is always moving. The one aspect I will always say to my clients is the rates are only as cheap as they are as of today because we do not know what we're going to come into tomorrow. So getting a deal secured nice and early just means we can protect against any negative impacts on the market. And you know, we've got a peace of mind that our mortgage payments aren't going to go above X. Now, we would hope that they will come down, in which case we'll keep reviewing with yourself and try and get those rates as low as possible for yourself. But it's having that level of safety net in place for yourself that allows you to know, regardless of what happens on the market, we're not going to be in a situation where things are unaffordable.
Yeah. And I think that, you know, that idea of safety net is quite a nice one, isn't it? So that somebody can secure the deal potentially and then have that ongoing monitoring is really, really important. So it's a big part of what we do, big part of your time, right?
Yeah.
Anybody that's approaching this for the first time might recall a purchase journey that was perhaps a bit stressful, as it often can be if you're buying a property, a bit painful, clunky, potentially depending on how that all played out for them. Is this the same? Like, are you starting again? And in terms of documents, what do you need to be able to provide?
No, the remortgage journey itself is, I almost want to say, a little bit more streamlined than a purchase journey. We've recently seen the FCA reduce the level of documents needed on a remortgage. So we've seen the need for documents reduce. So that's making things a lot easier.
And that's where your guidance comes in, right? That's why you need that early conversation to help somebody prepare.
100%. We want to prepare the plan, the journey, the rate, and also obviously what documents we're going to need, the information we're going to need, and make sure that when we do come to the application journey, we've got everything possible and that the clients are in a comfortable position that they know what the plans are that we're doing.
And just, again, preparation. Preparation. What about fees? People will have paid fees on some occasion when they bought their property. Is it the same again in terms of on the mortgage side, but also on the legal side, etc.?
No, this side is a little bit more different. I mean, lenders will typically offer like legal services in a remortgage. It's not commonly offered on a purchase. So we've seen
what does that mean? No.
So what
they're doing all the solicitor work for you?
It's almost built into the product. So when you purchase the house, you would have paid your solicitor to do all the legal work to make sure that the property is yours at the end of the day. When it comes to the remortgage side of things, you will have the lender's solicitor, but their fee is typically built into the product. Now, it's not to say that some fees can arise, because obviously they can. There might be unusual aspects towards the legal work that they might need to carry out. That obviously can come at a cost, but there is a large bulk of it that is built into the product, reducing what you need to pay. So it is reduced.
Okay. So in theory, based on your last two answers, not as stressful, hopefully, and not as expensive, hopefully.
Well, I always say to my clients, we always aim to try and take the stress out of it for yourself. So we always try and aim to make it as streamlined, as easy and enjoyable as possible.
I want to talk a little bit about energy performance. Might sound a strange one for a mortgage podcast, but we've seen that creep in a lot more, haven't we? And this idea of people retrofitting their home through things like solar panels, batteries, car chargers, even as something as simple as energy efficient light bulbs is a good place to start. That's cropping up more and more as part of the remortgage discussion, isn't it? It's worth you talking a little bit about that, because I think people are interested.
We're definitely seeing the EPCs come into play. Lenders are trying to advocate that they're wanting what is known as a green property, which is either within EPC of like an A or B. And with that, you'll typically get an enhanced affordability, because obviously with a higher rated energy performing property, you won't have to spend as much on like gas and electric. So
you might not have a gas bill at all.
You might not have a gas bill at all, and you might be giving electricity back to the grid. So it's a situation that they know that there's that extra bit of budget for the client, so they can give an increased affordability. And obviously with that as well, we're going to see property prices increase as well. And there is a potential ability to get like unique deals and potentially better deals than non-green.
And you're seeing this day to day. So, you know, I want to know from you as the expert, are you seeing more lenders offering these kinds of products that are aimed at helping people retrofit?
Yeah, it's definitely coming into the market more and more. We're starting to see lots of lenders jump on board with this. I mean, the biggest aim for this is working towards net zero. And this is the lender's way on obviously doing their part and obviously trying to get the housing down on its carbon emissions. So it's definitely something we're seeing more and more. And I have no doubt it will continue to grow over the next few years.
Yeah, I think, I mean, we're a B Corp, at time recording, and it's really important to us as an organization that we put these kinds of things in people's minds, because we do need to think about the future. We have got to consider it. You yourself, you're now qualified to give advice on green mortgages, right? That was issued by the Green Finance Institute. So how did that help you personally to understand these things a little bit more?
It gave me a really good background behind everything. I mean, a lot of it I vaguely knew, but it went into a lot of detail that it gave me a lot more understanding that what I can now do is I can sit down and have those conversations with my clients to educate them on bits about their property, what we could do if their energy ratings were slightly higher, what that could potentially mean in relation to the mortgage market. So it's allowed me to open that door to help educate my clients and not just guide them on the best mortgages, but educate them on next steps for them.
Yeah, okay, that's great. I'm going to ask you one more question.
Yeah.
So think about a client that you've helped recently, and in particular, think about a remortgage client that you've helped recently. Give an example of what kind of savings you've helped people make by doing all of the things that we've talked about now. So approaching the conversation early, getting into that collaborative discussion. What can the end result be if you get this right?
Well, I've had clients come to myself before, inquired just because maybe their friends used me and they wanted to look at their mortgage, and I've had conversations with them and they've been on that standard variable rate that we've just spoken about. So moving them off that instantly has reduced their bill. But obviously in doing that, if they're comfortable with the payment that they are paying, then it's that element that we could potentially reduce the term and help pay the mortgage off quicker. So it's not just about trying to get you the cheapest payments possible, because everybody's in a different situation. Some clients' plans are, I want to attack this mortgage, I want to get rid of it as quickly as possible. How do I go around doing that? And then we can look to potentially reduce the term. I mean, there's clients I've spoken to who have large level of savings who we've looked at particular offset mortgages for. So that allows us...
That's a whole other can of worms.
Yeah, that's a whole other can of worms. But having these particular products at our disposal allows us to tailor these products to the client. So it gives us that ability to look at somebody's broader picture. What are your plans? What's your financial situation? And then look at getting the right product for them.
Perfect. Thank you, Josh. That was great. Thank you, everybody, for watching and listening. We hope that you found this useful. We're definitely trying our best to demystify that remortgage process, and I'm sure you'll agree, Josh was brilliant there and giving really collaborative answers. So we really appreciate you tuning in, and we look forward to speaking to you next time.